Rohr here with an early global view on Thursday, April 9th, 2015. It is currently 7 a.m. U.S. Central Time, and there have been quite a few interesting fundamental factors, but most of them on the weak side for now. And yet the equities continue to hold up, and the dollar continues to keep the bid. So it's going to be a very interesting late week because of the lack of significant U.S. influence. And what has all this meant to the markets? Well, especially after those weak FOMC minutes that came out at 1 o'clock on Wednesday afternoon U.S. Central Time, the market did weaken off a bit, but really couldn't stay below that key threshold we had noted previous at the low end of the 2075 to 78 range. Ended up cleaning up for the close back into above 2075. And this morning, this market is up to at about 2078 after having been several points lower earlier. It just feels a bit stuck. And without much U.S. data, we're hard-pressed to see where there's going to be a bigger move later on this week. Now, that said, as we'll see on the intermediate term charts, the 2075 to 78 range with a tolerance going back even into last week, last week on Monday, 2081 and a half, and then this week going back into Tuesday, and then early yesterday, 2082 and a half to 2080 has some tolerance above that 2078 into just above 2080. Unless it gets through it, it's likely to attract selling. If it does get above it, your higher resistances are back up at the old December all-time high up at 2088.70, again at 2100 and 2106 or so. That was a significant high in the June contract, and of course the all-time lead contract futures high up at 2117.30. If it breaks back down in a more meaningful way, which of course would mean it gets back below 2067, we've seen interim support that's kind of important around 2060 to 58, but the bigger critical support is going to be back down into this 2040 to 36 range. And there's really not much to say on the short-term indicators because they've kind of flatted off along with the flat activity over the last couple days in the contract. And that pretty much does it for the short-term view of the S&P 500.